And we will get started here. All right. So we are Prepare and Prosper, a nonprofit based in St. Paul, Minnesota, that is focused on working towards financial empowerment for all. So we do this by offering free tax prep services and other no-cost financial services. So we are most known for our free tax prep services. In our clinics, we have income limits because we're focused on helping people with low to moderate incomes. Individuals need to make 40,000 or less annually. Families, 70,000 or less annually. We have many partnerships with community organizations that allow us to provide tax services throughout the metro. So we have 9 tax sites throughout the metro during the tax season. Our clinics run until April 15th, but know that we offer tax help in the summer and fall as well, and that there are no penalties if you're owed a refund if you file in the summer and fall or just late in the year. Appointments are required to get tax help at our clinics. The best way to get your appointment is to book online. You are welcome to call if that is your only option. We do get thousands of calls throughout the tax season, so booking online is usually the most efficient way, but feel free to call if that's your only option. And I want to add that scheduling will open again on Monday, March 9th at 9 a.m. So if you or someone you know is in need of an appointment, more appointments will be available on Monday, March 9th. So here are our tax clinic locations. I mentioned we have 9 tax sites throughout the metro during the tax season. Our main office is located on University Ave West, right off of Highway 280, and that is the same location as Crescimento Latino. We also have Hallie Q. Brown Community Center, Merrick Community Services, and Neighbors Inc. as sites in St. Paul. We have in Minneapolis, we have Green Central Elementary, Emerge, and Las Estrellas Dual Language School. And then in the suburbs, we have Cappy, which it's a temporary situation, but it's at Cross of Glory Lutheran Church this tax season in Brooklyn Center. And then we have Veep in Bloomington. Our DIY program is a great resource for people who are comfortable doing their own taxes, but want a little bit of support available if they happen to need it. It's available to individuals or families with AGIs of 89,000 or less. This is a remote program, so it can be accessed by anyone in Minnesota that meets the income guidelines. We give you access to free tax filing software, TaxSlayer. You get access to a free tax prep guide, and then you also have access to free virtual support. You can get support through email, or you can join our weekly Zoom sessions to get your questions answered about your taxes. So we offer specialized services for people that make self-employment income. So if you're a gig worker through Uber, DoorDash, things like that, if you are a small business owner, you can get your taxes done here at our self-employment tax clinic. We do have income limits in place. You need to make at least $10,000 annually in self-employment income, but also meet the incomes for our tax clinics that I mentioned earlier. So at least $10,000 in self-employment income, but no more than 40,000 or less as an individual or 70,000 or less as a family. So we also offer free financial coaching at Prepare and Prosper. This is a great program that I was in at one point, and several other staff members have gone through this program. It's free one-on-one coaching for anywhere between 6 months to 2 years. It's available in person or virtually, depending on what works best for you. And in this program, you can work on getting organized, boosting your credit, reducing debt, increasing your savings, and more. We also have income limits for this program, 55,000 or less for individuals and 75,000 or less annually for families. Just to briefly go over our other no-cost financial services, we offer banking support. So if you need help opening a checking or savings account, we can help you find a trustworthy place to do that. We can help you open a prepaid debit card if you prefer that as a direct deposit option. We also offer credit report review and support. So if you need help understanding your credit report, we can sit down and help you take a look at that. We can also help you create a plan to build your credit as well. We offer free financial planning, which I'm going to cover a little bit more in the next slides. But we have other services that we can connect you with through our trusted partners, such as Lutheran Social Services, Exodus Lending, and College Bound. Okay, so financial planning. We offer free financial planning. You can get professional advice from a certified financial planner volunteer. These are one-time sessions that are remote. So you can do it through your phone or through Zoom. You can talk to a financial planner about different things like preparing for a life event, building your emergency savings, retirement, investing, and more. There are no income limits to this program, so anyone on this call should be able to qualify. Um, our CFPs won't sell you anything. They're solely there to give you free professional advice, and this service is available February through May. So I just have a quote here I thought was a really great quote from a participant. I part I part I participated in a financial planning session with one of your volunteer financial planners. Within 5 minutes of listening to my financial issues, she knew what financial tools could assist me, explained what they were and how they worked, and provided a detailed plan to help me move forward with my financial goals. More importantly, she listened and spoke without judgment. She was truly amazing and made a huge impact on me in the 1 hour that she spent with me. Okay. I'm just going to take a moment to look at the comments and answer some of the questions that we have here. Um, we we are going to talk about the renter's credit later in this presentation. We are no longer partnered. Someone's asking if Prepare and Prosper is its own bank or is a part of Sunrise Bank. Thank you, Alejandro. Our tax and financial services director is in the comments answering the questions. But yes, we are not our own bank. We're not partnered with Sunrise Bank. We have a list of bank on certified banks that we can connect you with. And then someone's asking to get credit report support. Do you have to have a bank? Do you have to have a bank account with you? And then Alejandro answered, thank you so much. Our credit report support is open to anyone, and you don't need to have a banking account. So on this slide, I have a QR code that directs you to our free financial planning session form if you're interested. Just scan that QR code and maybe bookmark it. Okay. And then lastly, I just want to talk a little bit about our advocacy work and our values. So we know that today's financial system often leaves people with low to moderate incomes behind. There are barriers that prevent people from reaching financial empowerment, such as racism, ableism, and other oppressive systems. But we strive to break down these barriers for our customers and for all Minnesotans. So some examples of our advocacy work include our culturally specific tax site, Crecimiento Latino, which is tailored for Latino communities. We always strive to increase accessibility at Prepare and Prosper. We've testified at the Capitol for different things, such as increasing funding for all VITA sites, volunteer income tax assistance sites, not just Prepare and Prosper, but statewide. And then we make an effort to educate Minnesotans about important tax changes, such as through webinars like this one, but also through partnerships and tabling events and billboards and things like that. All right, well, that's it from me for now. And I'm going to pass the mic to Mike.
All right, thanks, Gene. Morning, everybody. My name is Mike Malloy. I am a site manager for Prepare and Prosper. During the tax season, I am up at our North Metro outpost in Brooklyn Center. Cappy, it's the church Gene mentioned this year. Then occasionally I'm at the main office over the summer and sometimes training our volunteers as well. So glad to have you here today. Um, yeah, first, just kind of a brief overview of what exactly a tax credit is. A tax credit is a way that Congress or the state legislature has decided to support certain groups or encourage certain activities via a break on their taxes. So this, you know, big common reason number one is kind of why Prepare and Prosper exists and the VITA program exists is that Congress has kind of decided for a few decades now that our primary means of supporting low and middle income people is going to be through substantial refundable tax credits, particularly for families with children. And then we also have tax credits that are specific to certain activities. Like it's mentioned in the bullet point, we have tax credits recently for folks to buy electric cars, folks to go to college. I'm trying to remember if they're still in existence, but for a while there were a number of them for energy efficient appliances, things like that. Um, yeah. So now we have two main types of tax credits, non-refundable and refundable. A non-refundable tax credit reduces the amount of tax that you owe. So, if you make the way your taxes work basically is we look at your income, and then based on your income, you owe a certain percentage of that in tax, and that number gets figured out. And then we begin to look at what credits you might be eligible for, and we chip away at that amount of tax owed. Non-refundable tax credits will chip away at that amount that you owe and can bring it all the way down to zero, but they're not going to reduce it below zero. So they're not going to generate a refund or any sort of new income for you. That doesn't mean that they won't result in a bigger income. It'll just mean that more of the money you might have paid through the year if you're working and your employer's been withholding your tax will come back to you. But it's not going to be a new amount of money coming back to you due to the credit. A refundable credit goes a little bit further. So it will still chip away at your tax bill, but once it's chipped that tax bill away to $0, there's often a remainder left over for you, and that money comes back to you. So that is sort of new income generated for you because of a certain activity you've done or because you belong to a certain group or income level. So as we're going to talk about here, a lot of the advocacy that needs to be done around tax credits is letting people know that, hey, even if you are not someone who made a lot of income or is working and paying tax, there are opportunities for you in these refundable credits to get some money back. That can be really helpful to you and your family. So there are some big federal tax credits that many people with low to moderate incomes qualify for. There's the Earned Income Credit, the Federal Child Tax Credit, the Child and Dependent Care Credit. These are pretty substantial credits, and again, this is a big reason why the VITA program that PNP is a part of exists throughout the country, is to help low and middle income folks take advantage of these credits. The federal legislature has decided that these credits, though, very often require that you work a little bit through the year, which is what results in what's called earned income, and that you have a social security number for you, your spouse, and children. So they're generally available to folks who are citizens. Most of these credits, or some of them, are not available when filing separately. We're going to talk a little bit about some of the differences in the state tax credit requirements. This webinar focuses on those state credits. This bit about the married filing separately, though, I believe is generally going to hold true for the state, where that's sort of a tax status that generally results in reduced credit. So if you are married and you're looking at filing with these taxes, we often tell you should have a pretty good reason to file separately, because that you do often risk losing out on credits from either the federal or state government. All right, so Minnesota is kind of a unique state in that it not only offers tax credits, but it offers some pretty substantial ones. And like we talked about on that last slide, the federal government often has those requirements of needing some earned income through the year to qualify for the credits and needing a social security number. The Minnesota tax credits that we're going to talk about today are also available to folks with an ITIN. That is an individual taxpayer identification number, and that is a number available to people who don't have social security numbers. So often non-citizen residents of the U.S. and of Minnesota who can claim these credits. All right. The first big one that we're going to talk about is the K-12 education credit. This is a refundable credit. So if we can remember from a few slides ago, this is one where even if it'll lower our tax bill to zero, if we can show an amount of the credit beyond that, we'll get that back. You can get 75 cents back on every dollar you spend on educational expenses for your child who is in kindergarten up to 12th grade. A big thing that we're always talking about with this one is, one, just letting people know it exists, but two, telling folks to hold on to their receipts for this one. There aren't really any situations with taxes where it's a great idea to be kind of estimating numbers, but this one in particular is one where you should not only know exactly what you spent on the categories of eligible expenses, which we'll talk about in a moment, but this is one that the state does frequently check on. They audit returns to make sure that the expenses claimed for this are real. And so we encourage strongly that everyone has their receipts held onto throughout the year, both so that they can track these expenses. Right? If you've got a kid in school, you're kind of constantly buying stuff throughout the year. It's not just that August back to school shopping. So you want to hold on to them so we can get you a number, but you'll want to hold on to them even after filing in case the state decides to ask you about these expenses. All right, so here we have the income limits. If you have one or two children, this is available to folks whose adjusted gross income goes up to 81,820. Um, and then it looks like $3,000 for every additional kid, three and more than three. We keep increasing that by. Okay, so in order to claim education expenses for this credit, you must have a qualifying child, um, which is based on the federal definition for the earned income credit. That child has to be attending school in a grade that's kindergarten through 12th grade. And then you have to pay eligible expenses for that child during the year. So the big one with this is, making sure the kid is in the correct grades. This is not going to qualify for pre-K children. And then it can't just be any child, if you're helping out your niece or your grandkid and someone else is claiming them as their qualifying child, um, this isn't going to work for you. You have to have that relationship with them where they are your qualifying child. All right. And here's our big list of educational expenses that qualify. I'll give folks a second to read through it. I think it's somewhat quicker to go through maybe what doesn't qualify, because it's a substantially shorter list. Clothing and uniforms is a big one that doesn't qualify. The backpack won't. Um, Lunches and snack does not. Um, a key distinction. So when we think about extracurricular activities, sports will not count. Non-academic extracurricular, programs don't count. This is supposed to be really for school, the classes that show up on your report card type stuff. The one sort of exception, I don't know how often this is a class at schools versus an activity, is music. Music lessons, musical instruments, those do count. Um, Things like internet or driving, those don't count. And then some of the stuff that might not jump out that does qualify, I think of the field trips, um, the summer schools and summer camps as well, and private school tuition. If they are in a private school, that can count. And a computer. Computer is a big one that can count. It is limited. They don't give you the full cost of the computer. Um, but these are the big categories that we have, that you'll want to track your receipts for on the left. See a question about tennis shoes that are required gym clothes. I believe I don't have it in front of me. We have an example on this in the manual, and I'm almost positive that that does count as gym clothes. If it's for gym, if it's for, the after school basketball team, that's different. It's got to be for a school class. And so we have a lovely envelope, that we give folks that has a list of these qualified expenses on it. That's a helpful reminder, and it's something that you can, put it up on the fridge and check them throughout the year. Um, you'll want to bring them with you to your tax appointment, whether you're filing with us or someone else. We'll want to get that number exact. And like we said, you'll want to hold on to them, keep them with your envelope that you get with your taxes in them, in case in the future anyone decides, anyone from the state wants to reach out to you to check on them. So that's what to do if you're a customer. If you are sort of a community, stakeholder or volunteer with us, make sure you're talking to families about this. You can use our resources, to learn more about it too. If you want to, you know, keep an envelope with you so you have a sense of what does and doesn't qualify. And then if your organization would like to give out those envelopes, we have a QR code here. And Jean, that's going to lead them to a form through which they can request them.
Yes. So the form allows you to request our brochures in English and Spanish, but also the K-12 tax credit envelopes in English and Spanish. I do see a question here. Can I read it off to you, Mike?
Sure.
So would after school choir offered by the school qualify? It's an extracurricular activity, but offered by the school. Like fees, I'm wondering if they're meaning, oh, okay. Fees for the school or uniforms.
Um, that is a good question. This is one where I don't think I'll be able to answer this right now. I think I would have to look up whatever the state law says because to me it's kind of borderline in that musical category. Um,
Yeah, they
so I
said,
can't be certain. Yeah.
okay.
I think it's a question of whether it's that like musical activity that kind of gets counted or an extracurricular that does not. So we can
Yeah.
look that up and maybe get back to you after.
Yeah. Yeah. If you want to share your email, we can figure it out and send you the answer. It looks like someone else is asking if a person paid for the school supplies or any tax credit based product with a gift card, would that still work for the K-12 credit?
Uh, I believe so. Yeah, gift cards I know are treated as income if you receive one in many cases. It's one of them where I'm not 100% positive, but I'm
Explain that a little bit.
95% positive. I just don't think we really get into the what's the source of it as long as it's you paying. Um, and I know there are situations in um, other contexts in which, if a person is paid with a gift card, for example, for some work, that can be counted as income. Um, so yeah, in the sense that it's something it's a cash equivalent that you have that you are spending. Yeah, maybe that's one to double check too, but I'm almost positive that would be fine.
All right. Thank you all for the great questions. We'll move on.
All right, so we got a little quiz question here. Mara qualifies for the K-12 education credit. She's got a child who's eligible. Her child had an amazing year playing baseball, basketball, and soccer. She spent a lot of money on registration fees, uniforms, and equipment. Can she receive 75% of her expenses back through the K-12 education credit?
Okay.
Yeah, our answer for that is no. No, sports does not qualify for the education credit. All right, so now we're moving on from the education credit into the Minnesota Child Tax Credit. Um, this is a refundable credit made to support families with children. This is a pretty unique one. There's a number of states that offer some kind of child tax benefit. There's obviously the large federal one, and then it's quite common for states to kind of supplement the federal one or mirror it. Minnesota is really unique in just how substantial this child tax credit is. I have not done an exhaustive look at every single state and what they offer, but I do know that this 1750 per child, the maximum amount that can come back is quite a bit higher than any other state that I've ever seen offers, and I have looked at quite a few of them. So it's a pretty exceptional policy that we have here. And this is a big one to make families aware of because, again, it is refundable. You don't need to have made income throughout the year to obtain it. All right. And in response to Andrew's question in the chat, right on time, we have these income definitions. And so our income levels are going to be slightly different for married filing jointly couples and non-married filers to kind of reflect that different number of people in the household needing to eat. So we can take a moment and look at this table here. And then if you've got an exceptionally large family, it's an extra 14,500 or so for each child. All right. So again, we're looking at that definition of a qualifying child from the federal earned income tax. That was the same requirements as the education K-12 credit. Partial year residents are eligible for the credit even if they move into or out of Minnesota during the year. That's a pretty big one to note. But you are not eligible if you lived outside of Minnesota all year. You have an IRS ban on claiming the federal earned income tax credit. There are a number of penalties available to people um, because of fraudulent or otherwise uh, un in incorrect claims of the earned income tax credit that can result in IRS sanctions on a person from claiming it in the future. And then you cannot be someone else's dependent or qualifying child. Yeah. So this is a big thing for anyone who's a volunteer at our tax clinics, or anyone who's interacting with a family who's interested in filing taxes, is making sure we ask about kids 17 or younger. There's a lot of folks who this is front and center in their mind when they come in to apply taxes. It's the credits they get back for their kids. But we also run into folks who kind of think, my kid's older. Maybe they work a little bit themselves. I don't know that that's a person that qualifies for a credit. Any child you have 17 or younger is going to qualify you for this credit. And so you'll want to note them on your return and come in and file your taxes, whether you are working or not. Yeah, so that's just kind of the message for both customers and volunteers is to, if you have a child 17 or younger, get in here and file. And if you're a volunteer or a partner and you know someone who has one, double check with them that they're filing, because if they're not, they're leaving money on the table. All right, quiz here. Layla is a single mom with 2 kids. She spent most of the year caring for her seriously ill mother and couldn't work, so she has no income. A neighbor told her not to bother filing Minnesota state taxes. Is this true or false? Yes. I like the exclamation point on Teresa. An emphatic false, because she has 2 children for whom she can qualify for that refundable credit. And this does not require earned income the way that the federal one does. All right, so a new option that began last year is that folks who qualify for this Minnesota child tax credit can receive payments of the next year's child tax credit in advance. The thinking behind this is that it's important money for families, right? We've said it's a pretty substantial refundable amount. And for a number of families, your situation is pretty consistent year after year. You're making a similar amount of money. You've got those same folks in your household until they turn 18, right? And so in order to get that important money in folks' hands faster, the state has begun offering an option to receive a portion of it in 3 payments in August, October, and December of the prior year. So the timeline, it's a little confusing on this. I think we can go into that more on the next slide. Right. Okay. Folks who would consider getting this are, like I said, that consistency is really key. So you think you're going to have a similar income next year. You think you're going to have the same number of people. You're not going to move out of Minnesota. Those are important because if the credit changes between what you think you're going to get and get in advance and what you actually get come next tax season, we'll explain this in a moment. you might have to pay some of it back. So to avoid having to pay it back, you'll want to be sure you're in a pretty consistent situation. And then you'll be someone who wants to prefer to get that money early. We've had people who this would have worked for who declined it because they just said, I like one big check in March, which is a fine reason. Another potential reason to maybe consider not doing advance payments is that if you receive food benefits through the SNAP program, the SNAP program has determined that these advance payments need to be counted in the monthly income for your SNAP budget. And so it can be the case that if you want to do these advanced ones, your monthly SNAP benefit could decrease. That will never be the case if you wait and get the credit all at once with your taxes. It's a kind of complex area of the SNAP policy, but that's something we try to make folks aware of too. All right, so now we got this kind of helpful sort of imagine a timeline below demonstrating how this works. So we're going to talk about the Jones family. They have three children. They qualify for the Minnesota Child Tax Credit. They expect their tax situation to remain the same. Those kids are going to be in the house again through all of next year. You know, mom and dad are going to make the same amount of money. They have a pretty good idea of what's going to go on. So this year, their child tax credit was $5,250. Because so the way that the advance payment works is you get half of it early and across three different payments. So one half of 5,250 is $2,625. So if everything else stays the same, they'll get $2,625 early during 2026. Most people have to wait until spring 2027 to get their 2026 credit. So they're going to get 2,625 of it early and 2,625 of it when they come back and file their taxes in March or April or whenever. The 2,625 they get early, they're not going to get it all at once. The state wants to spread it out over a few payments. So they'll get a portion in August, a portion in October, and a portion in November. And then as we mentioned, there's some potential if your situation does change for it to pay back. That would be taken care of at the very end of this graphic here in that tax time 2027 where we'd figure out if it was a different amount, what you would receive or potentially need to pay back. So the big takeaways on this are that you can get this money early. If it would be helpful to you to get it early and you think you're in that group where you've got a pretty stable situation, you should know this is available to you and think about if it would be beneficial to you. And again, you know, if you're a volunteer here or staff, you know, try to be aware of that schedule for payments, let folks know about that option, and try to give them that sense of, you know, if this is right for you because your situation is pretty stable, it's something to think about. All right, another quiz. Jordan and his ex-partner share two kids. Jordan is considering signing up for advanced payments of the Minnesota Child Tax Credit, but he and his ex-partner agreed that she will claim both children on her tax return next year. Should Jordan sign up for advanced payments? No, because if Jordan is not going to claim the kids on next year's return, then there's going to be some complexity. It's going to probably end up owing that back. So that's what we talk about when we want that consistent situation where this is going to make sense to you.
All right. I see a question in the chat, Mike. Someone's asking, when can people choose the early payments or sign up for the early payments?
Yes, you have to opt into the early payments by April 15th. So if you get in a few weeks late, you file in May 15th, you cannot opt in to get these payments early. You have to file on time for that to work. Which I think is mostly just for, the state's sanity in terms of, administering this and not having to be processing new people throughout the summer up until they start doing those advance payments or splitting it in only two payments for someone who filed in August. So you must file by April 15th in order to do the advance. And obviously, it doesn't mean you lose the credit. It just means that you will get it next tax season. You lose the advanced option. I'm reading the second question. Can you only opt in as part of filing your tax return? Showing the child on the return. I don't totally understand this question, Teresa. But yeah, you can't really break it up by kid if there are multiple kids. It's kind of all or nothing. And again, it'll only ever be half of the credit that you get in those early payments. There'll always be a half that you have to wait for tax season to claim. All right. And then if that answers questions on the child tax credit, move on to the Minnesota Working Family Credit. So this is a refundable credit for people who work and earn below a certain income level. So this one you do have to have some earned income from. You do not have to have children from it. And it's got a relatively low phase out compared to some of those other ones that we've talked about. So $37,910 if you are married filing jointly with your spouse, or $31,950 for all other filing types, singles and heads of household. The credit was worth up to 4% of your earned income, up to a maximum of $379. And some ineligibility stuff. So you can't have lived outside Minnesota all year. Again, like we talked about, that married filing separately status is often not beneficial to people when it comes to credits. This is one of those examples. Sorry, unless you have children. You can't be another person's dependent. And again, that restriction on the folks who have had the federal earned income tax restricted from them. All right, the renter's credits. This is a big one that a lot of folks are familiar with. This is a refundable credit for lower to moderate income renters. The idea is that a portion of the rent that you're paying is going through to property taxes, and because we have some other tax credits available to property owners who pay property taxes, that you should get the same treatment on the property taxes that you are indirectly paying through your landlord. So to qualify, you need to have been a full-time or part-time resident who paid rent in Minnesota, in a building that was assessed property tax, or made payments in lieu of property tax. We don't need to get into what that means, but just that idea that this is you indirectly paying property tax and the state deciding that was maybe a bigger expense than we ought to have asked you to chip in, and so we'll give you a little money back. You need to have a household income under $77,570, and you cannot be claimed as a dependent on someone else's return. So where that's an important one is if you are a college student and you lived in an apartment or your dorm. I don't think the dorms would actually pay property tax generally, but you lived in an apartment for a little bit of time, but you're also going back home, in the summer, and your parents kind of keep a room for you and they're paying for the house and you are their dependent. You're not going to be able to file and claim your rent for a credit. That's not how this works. It's got to be sort of a primary household for a family unit. Maximum credit is $2,720, but the actual amount you receive is going to depend on, we've got a set of tables in the state instructions of it's based on a combination of your income and the amount of rent that you paid throughout the year. All right, so the form at the heart of the renter's credit is the certificate of rent paid. This should look familiar to quite a lot of us. You are supposed to get this from your landlord or the property owner by January 31st. They can drop you off a paper one. That's what my landlord does. He taped it to my door, or they can email it to you. If you've lived in multiple units throughout the year, you're going to want to wait until you have all of them together because they calculate the credit all at once on your state return based on all of the rent that you paid. This is a form that landlords quite frequently mess up. These are the guys are not in the habit of filling out tax forms. They're not really, employers. So it's quite common that we have mistakes, whether in, the dates that are listed on the form or the rent amount. There's all kinds of things that can go wrong. So make sure that you check these carefully. It's also unfortunately relatively common for folks to not get one of these from their landlord. In that case, there's something called a rent paid affidavit that you can get from the Minnesota Department of Revenue, which is basically you swear, I paid X amount in rent this year, and I would unfortunately can't get a form from my landlord to report it, but I still want the credit. We encourage people to work with their landlords first to get that form because it can be quite a bit quicker than the rent paid affidavit, but that's the option available to you if your landlord is being unhelpful. So a big change that occurred with the renter's credit beginning last year is the renter's credit used to be on an entirely different tax return. So if you've been a Prepare and Prosper customer for years, you're probably used to getting an envelope. And if you're someone who got all three returns done, you'd have a space for a federal refund or amount due and a state refund or amount due. And then your property tax refund, the M1PR amount due. We've got 3 spots on the envelope. Beginning in 2024, if you are a renter, you now just put this on your state return. So you only have 2 tax returns, a federal and a state. The 2 big differences with that, I'm going to start with one on the bottom, is that this is something that folks used to get in August to align with the schedule for homeowners. For homeowners, they're on a little bit of a delay because it takes the county some time to put out the property tax statement. So everyone used to be on that delay for the homeowners, and the credit would go out in August. Part of the reason to put this onto the state return is to not make folks who are renting have to wait until August to get their money. So that's a plus of this. One little complication that means though is that it used to be the case that if you were having some issues with your landlord getting you the form and you came into PNP in March because that's when your appointment was, we could file the state return and say, hey, just come back and let's do the rent during one of our summer clinics. Now it's a trickier thing to file the state return without all of your rental information on it. So we really encourage folks to get all of those CRPs when you come into file right now, because otherwise you're going to have to come back and amend it to get that return done. And that's quite a bit lengthier of a process than it used to be to just do the rental only returns. And so we're really encouraging people to really try to make sure they have all those certificates of rent paid, work to get all of those for the year before you come in for your appointment, because otherwise we're going to have a conversation about whether it's worth it to you to file a state return and get some of your credits back now and have to do an amendment several months from now, or to wait for you to file this spring once you get that last document in. All right, again, so that big takeaway, I think the biggest thing we've seen with a lot of folks is they're used to waiting until the summer to come in and file a state tax return. There's a lot of folks who only get this renter's credit, and there's no need to wait until summer anymore. You can come in, as soon as you get the form from your landlord, you can come in for your appointment, and we can file it for you. Again, really get together all of those CRPs throughout the year. And then if you are missing one or it's incorrect, work with your landlord to get that corrected. Another complication is that There's now an online system the landlords have to use. So make sure your landlord doesn't just, scribble anything out and get you a new paper when they're going to have to sign in and do it the right way. And then if it comes to it, you know that you have this rent paid affidavit option available to you. And then for our volunteers and partners, what you can do for this is really just reiterating for folks, make sure you have all of these CRPs and know that they do not have to wait until summer. They should be on the lookout for that check right away, and that there's not going to be, if they're confused why there isn't a third amount, it didn't go away. It's just a part of their state refund.
Okay, I was just typing the answer to a question. Someone asked, what did it say we can do if your landlord didn't send you your CRP? So I just shared the link to Mindor's page where
Thank
you could request a rent paid affidavit.
All right, so here's our quiz question. Alex wants to claim the renter's credit. He lived in two places in 2025, but doesn't have both certificates of rent paid yet. To get his refund as soon as possible, should he file now anyway, even though he's missing a CRP? And so what we think is that he should wait until he has all of the CRPs together so he can claim the full credit and not need to amend his return. Um, we just try to avoid that amendment process if we can. We want to make clear that if you need an amendment, in the summer we bring people in and we help them fix theirs. But when we can control it on the initial filing, we really try to avoid setting you up to need to come back to amend. Um, we want to just file it once and get it right for you. All right, and a second renter quiz. Jasmine is a renter. In previous years, the renter's credit came as a separate summer payment. She plans to file her taxes in March. When should Jasmine expect to receive her check after she files? Check or direct deposit. And this is going to be just a couple weeks after, probably. It's going to come with the rest of her refund. It's not going to come in August. It's not going to be some little, end of summer bonus the way it used to be. It's going to come with everything else shortly after you file.
All right. So I have another, now that we're at the end of the presentation, I have another poll to share. It's the same poll that we started with at the beginning, just to measure your understanding of the tax credits that we've discussed today. Okay, looks like most people have answered. Thank you so much. It's really helpful to have that feedback. So I just want to share that we are part of a Prepare and Prosper is part of a coalition that shares information about Minnesota tax credits. We help manage this website. It's minnesotataxcredits.org. So it's a great place to go if you are wanting to stay informed. And this website is available in English, Spanish, Hmong, and Somali. But that is the end of our presentation. Thank you so much for being here today. We are a little over time, but we would love to open it up for additional questions now. Okay, I'm not seeing any questions, but we had tons of great questions throughout the presentation. So thank you, everyone, for attending today. All right, thanks, Mike.